Good morning. It's Friday, April 12th, 2024. It's 11:15 a.m. on the East Coast. This is Rob Sin at CEO Technician on X, at Goldfinger on co.ca, Goldfinger Capital on YouTube. Doing this video off the cuff here on a Friday morning because there's a lot happening in markets, and I feel it's important. Again, if you find value in my content, please subscribe to the YouTube channel, follow me on X, hit the like button. Gold. Wow. You see the quotes up here. We hit 24.48 just about 15 minutes ago on the June futures. Silver hit 29.90, actually 29.90. Um, wow. Okay, so first of all, wow is the feeling here, seeing these charts and seeing this price action. Gold has been relentless. And the price, so this is a 30-minute chart. It has formed multiple consolidations during this whole rise in the last few weeks. And it's trading absolutely up to this point, absolutely perfect textbook bull market. It advances, strong accumulation, strong buying, and then it rests for a little bit. It could be a day, it could be a few hours, and then it persists higher. Okay, the accumulation is so strong that it just keeps taking out the supply at higher and higher price levels. This is absolutely bull market price action. Up until this morning, up until this morning, I do want to urge some caution here. Sentiment is starting to throttle up. Finally this rally, this move that you could say started in February of 2050 or started in March of 2160. Basically, the last 15 to 20% of this rise that gold has had here in 2024 during March and April has been pretty healthy, and I haven't seen a reason to say, okay, that's it. But this morning, we're getting a lot of war headlines. Marco Rubio, a U.S. senator, saying, barring some last minute surprise, Iran is going to attack Israel. So the response and the risk of escalation will depend upon what and how they attack, right? So that's interesting because you have a senator. This is a very telegraphed attack. Obviously, the Israelis killed an Iranian general a week or so ago in Syria. And it was a very bold assassination. And Iran has to save face by counterattacking, an eye for an eye sort of, mentality. The problem with this is, well, it's extremely telegraphed because Iran keeps saying they're going to attack. And, Israeli intelligence, American intelligence is saying they're going to attack. So everybody knows this attack is coming. And it's clearly contributed to some of this recent gold rise. I mean, I really think this last $100 from yesterday morning to 24.48 this morning is this war risk. I don't see any other clear catalyst. Now, I know China's accumulating, but they don't buy like this. Okay, they're not driving it up $100 in a few hours. That's not how they buy. They buy steadily at a certain price level, and then when they exhaust the supply, then they lift it. And Chinese buying has been a big contributor in the last month, but this morning there's a bit of panic in the air. We've seen the stock market start to roll over a bit. Just in the last 15 minutes, gold has pulled back, silver has pulled back, and stocks have bounced a little bit. So clearly there's an inverse correlation here going on this Friday afternoon with this war risk hanging over our heads. There's an inverse correlation between precious metals and the US stock market. And that makes sense, right? If the war risk becomes much less, a lower probability of a major event, then stock should lift back up and precious metals should cool off, right? But then you'll say, well, what if it is really a major confrontation and Iran and Israel are going to war, and the Middle East becomes engulfed in flames. Well, that's a very bad outcome. That's a very dire outcome. I certainly don't want to see that happen. Could gold go higher on that? Certainly. But at this point, I think the odds favor some consolidation or a correction even in precious metals off of that 2448. Gold could drop back into the low 2300s very easily. That wouldn't mean the bull market is over. That wouldn't be a bad thing at all. But I think at this point, seasoned precious metals traders know that one of the dumbest things you can do is chase gold on a big rally on war or terrorism risk. Okay, usually that is a very, very bad idea. Okay, um, the miners, the the GDX weekly chart. This looks extremely bullish. This is the way that the a new bull market would start with this sort of powerful, drive off of a major low, a capitulation low in February. So we have to be clear on time frames here. Just because maybe gold will cool off here in the next few days or the next week, that doesn't change that this is very likely the start of a new bull market for the gold mining sector, right? And it has had, just like gold has had, it just had a very big move in the months of March and April. So some consolidation, some cooling off would be well well received. This changing correlation between treasury yields and gold. So I pointed this out yesterday. You can see the correlation between the 10-year note yield and gold is positive 73%, right? Over a rolling 20-day period. So the correlation has become extremely positive. This is very unusual. And this is a sign, if I could explain it simply, it's a sign that monetary policy is no longer the main or the only driving force in the gold market, right? There's other factors at play here driving precious metals higher during the last few weeks. And I would just generally say that's a bullish thing. It's a bullish factor. But I'd also say that, you know, correlations are constantly changing. So if yields persist higher, I would expect eventually them to reach a level that actually it's negative for gold again, right? So we shouldn't expect this correlation to stick at positive 73% forever. It's likely to change. But just a finishing thought here. I mean, the volatility is definitely spiking up here. 2448 is a pretty lofty level for gold, and we are coming off of that right now. I mean, it's to be expected. I don't think that a lot of traders would want to hold a whole bunch of gold exposure at 2448 heading into a weekend where, Iran could prove to be bluffing and do something very small, a very small, response. And again, if it's World War III, then, well, shit, you know, I don't know how much gold's going to help you in World War III anyway, So it just let's hope cooler heads do um, come in here and cool things off in the Middle East. But that doesn't mean if we do get this pullback in gold that the bull market is over. It's kind of overdue, and we got very, very overbought here this morning. So those are my thoughts. And again, watch for my weekly video. Will be out Monday morning. As always, have a powerful trading day and a wonderful weekend.